Alright, now what's up guys, welcome back to my YouTube channel. You know, it's your boy V Dollar back in today's video. Now in today's video I'm going to be basically talking about a few basic mistakes that most traders commit. Now you realize these mistakes from the losses that you start taking and you be like, oh my goodness, I've been committing this mistake.
What?
But before you get into the losses, let me break down these mistakes and you guys will actually realize that we do these same mistakes time over time. Okay, now if you guys like the video, please consider smashing the like button and please make sure you subscribe. So we are going to dive straight into it. Right now I'm going to be basically discussing 4 mistakes. Okay, now the fourth one is getting into a trade when it has actually left you. Now what does that mean? Now you guys know an incident where you have analyzed your trade, but then all of a sudden the trade started the move when you weren't watching the charts. Okay, this is a clear example. Let me go down to my charts and then show you an example of this. All right, now this is how basically it looks like to chase a trade. Okay, so we are going to consider just a given point around here. So we are going to consider a sell around here. Right now we're gonna assume that okay, we had started pushing down up to this point, right? Let's say by the time you actually saw the trade, we had actually reached a point around here. Right now what happens is you're going to enter trade at this point. Okay, it's okay, you're entering your sell. You're going to enter your sell from here. First things first, you are going to be forced to place a stop loss way too far for you to be on a safer place, and then you take profit, let's say below this, whatever, 1 to 2 or something. But the problem is you can see that we had started a momentum push already. Now guess what, from this big push, and of course we had to see a pullback. Now you made some little money from here, right? This small move, and then all of a sudden we saw a pullback to the upside, and that's a drawdown already. That's a drawdown because you were in profits and now it's a drawdown. Boom boom boom. And guess what, you even get stopped out. Why? Because you sort of try to chase the move. Okay, so don't do that. So basically you guys really understand that when you have actually analyzed and you know that okay, I'm supposed to take a buy from this point, and then all of a sudden by the time you come back to charts and you find out that the move has left you, you don't have to enter the trade, right? You don't have to enter the trade because like when the markets are in a momentum already pushing to a given direction and you get in, there's a higher probability that by the time you get in, a pullback could be coming in. And when you face a pullback, of course, guess what, you're going to get down into a drawdown. Now you have emotions now fighting you, so it's really all so hard. Okay, so one thing that you really need to emphasize is never get into a trade when it has actually left you. In other words, never try to chase a trade. You guys understand the point. Chasing a trade is dangerous. It's dangerous because at the end of the day you are going to face a drawdown. You're going to start fighting your emotions because you caused the mistake. Don't try to chase the markets. Okay, no way. Just wait patiently, wait for a pullback, wait for the markets to come back to your entry point and get in. Okay, or if you find that the move has actually left you, then stay away. You know, it's okay, just stay away for the day or look for another pair, but don't try to go in when there is a momentum push already. Okay, the best points to actually enter positions is when we have pullbacks. Now entering positions on pullbacks is really so good because that's when our new momentum push is actually going to clock in. So when you get in at that point, you are safe. You know, you are good to go, rather than getting in when the move has actually started pushing. Okay, now a third point is trying to get into a trade that actually doesn't match your RR. Now what do I mean by RR? Of course I mean your risk to reward ratio. Now if your standard risk to reward ratio on your trading plan is 1 to 2, right? Risking 1 to make 2. Okay, and then on a given trade you find out that your risk is way bigger than your reward. Okay, don't enter such a trade. Why? Because it means you're risking bigger than what you are intending to make. And does that make sense? No way, because in a long run, if you do the same mistake over and over again, you'll find out that you are making money at any point. You are rather losing because you're going to make a little money from a winning trade and lose big money on a losing trade, and that doesn't make sense at all, right? Because you aren't considering your risk to reward ratio. Okay, like if you have a standard risk to reward ratio of let's say 1 to 2, 1 to 3 RR, just keep that. Okay, if you get a trade which matches that, enter trade. But if you find out that your trade is let's say your risk is 20 pips and your profit target is 10 pips, it doesn't make sense at any point. At the end of the day, you're going to make 10 pips when you had risk 20, meaning if you had gotten into a loss, boom, 20 pips down account. You know what I mean, right? So it's really so crucial that you consider your risk before you get into a trade. Most importantly, actually, the risk, okay? Because at any point you shouldn't set a trade where you find out that your risk is bigger than your profit. That's no way. Like, we are trying to make money, not lose money, okay? So be sure that your risk is always lower than your reward, okay? Now you can always find such a better trades on pullbacks, like I discussed in our first video. When you enter trades on pullbacks or on key levels, you always get a very clear point to place your stop losses, okay? About 10 to 20 pips, something of that sort. It's really so important for you to be risk conscious, so at the end of the day you do not make regrets of, okay, I lost money because I was using a bigger stop loss, or maybe this and this. You guys understand? Now our second point is don't enter trades when we are consolidating. Now I know most traders do trades because, okay, it's a trading day, I have to trade, right? But what I can say is do not enter trades when we are in a consolidation state. Now you guys know that we have an uptrend, we have a downtrend, and then the consolidation, right? Consolidation is where the markets are moving sideways. Now don't enter trades when the markets are moving sideways. Guess why? Now when you enter markets in sideways direction, you aren't going to make money on a smaller account, or whether it's a big account, no matter, because it's not a clear direction. You're going to make, let's say, 10 pips, 5 pips, and boom, again back down. You're going to set out let's say a profit target of about 20 pips, and you will only move 5 pips, and boom, it doesn't make sense at all. How about you entered a trending market? If it's to the upside, of course, we are looking for buys, we are going long. And if it's a downtrend, look for sales, okay? Just establish those trends and get trades in there, because at the end of the day, you won't fail to get a trade from many pairs, at least a clear trending market, okay? Now, how do you establish the trends? You guys remember we discussed the 200 moving average some time back. You can still use the 100 exponential moving average. When the market's above the moving average, of course, that's an uptrend, and we are looking for longs, okay? We are going long. And then when the market's below the 200 moving average or the 100 exponential moving average, we are going short, okay? We are taking sales, okay? Now, for consolidation, let's say you used the moving averages. You're going to find out that the moving average just crosses the markets every time and again. And then you can also draw support and resistance levels, and you'll find out that the markets are just bouncing in between those two levels, okay? So don't trade consolidating markets. For you to really make money, you need to find trading markets, because it's really so easy to make money on trading markets as compared to consolidating markets, okay? Now I'm going to give you 2 bonus tips before we dive into our number 1, okay? Now we have an issue of trading too much. Now you guys usually trade too much, and guess what? Trading a lot is over trading, and that's detrimental. It's not recommended. Now how does this happen? Many traders think that when you trade too much, it's when you make too much money, but that's actually not the real point. Guess, trading too much is actually risking your account a lot. It's sort of exposing your account to a bigger risk. And don't do that, okay? If you have on your trading plan that you're supposed to trade 2 times, only trade 2 times and get out. Now, I'm speaking this from my personal experience, because sometimes I remember I would trade 10 to 20 times until I blow my account. I'd keep on my phone, on my computer, trading, looking for trades until the account is wiped up. But don't do the same. If you have opened up your trades, okay, that's for the day, leave your chats, go do something. If it's playing games, go play games. If it's your basketball, go go see friends. Just leave the chats for now, okay? Or just go do something to avoid trading too much. Trading too much is literally over trading, and over trading is for inconsistent traders, okay? Another mistake that most traders do is using a bigger leverage. Now, leverage is good, but on the other hand, it's bad. A bigger leverage is a bigger risk, okay? Now, if you use, let's say, 1 to 2,000 on $100 account. That means your account can be able to open up positions of, let's say if you had an account of $200,000. now that exposes your account to a bigger risk. As on some brokers, you're going to open up bigger positions on a small account and your account will just blow without even getting a margin call. Why? Because of the leverage. Okay, now one thing that I would share with you guys is use a medium leverage. It shouldn't be really so small, and it shouldn't be big. Okay, when it's big, that's a no. Okay, so you can use maybe, let's say 1 to 100, 1 to 200. If it's really so big, just stop at 200 or 500 anyways. But one thing that you should really know is leverage can be really so dangerous on yourself and your account. Okay, it can really be so dangerous on your account. If the leverage is bigger, your account is exposed to a bigger risk. Now let's dive into a number one point. Now this is a common mistake many traders do. Many traders guess, and guessing doesn't work in trading. That's why we have technical analysis. Now you guys really need to understand that the markets just present data. Okay, this is data of what's happening in the world. It's not derived by you or by someone else. No. Now your job is to come here and do your analysis and find a trade that actually works for you. Okay, now many traders don't do the analysis, they rather guess, and guessing doesn't work. Okay, now what's the solution to this? Get a trading strategy. Okay, and don't switch many times. No way. Get a trading strategy, stick to that trading strategy and just trust it. Okay, now if you're using indicators, and let's say you're using a moving average or alligator or whatever, just stick to that. When it shows that, okay, this is an entry, get the entry straight up in. Okay, don't guess that, okay, wow, I think this is an uptrend, I think I should get a trade in, and you know, that panic state of mind. No way, don't do that, because that doesn't help at all. Okay, maybe one more thing that I actually forgot is when you are using indicators, don't use many indicators, just use a few indicators. I see many traders really battle around with a bunch of indicators, 5, 6 indicators, you know, all looking for the same thing, buy. You have 5 indicators and you're looking for only one buy. It doesn't make sense. When you have many indicators, they are going to cause confusion to you. Okay, now I really hope you guys really enjoyed today's video. Now you can join our main Telegram community to always interact with me and get trades from us. The link is in the description below. So I will see you guys soon. I'm out.